everyone. This is John Feneck with the Feneck Commodities Report, and with me today are two executives from Sonoro Gold, the CEO, Ken MacLeod, as well as the chairman, John Darch. The ticker on this is SGO in Canada and SMOFF in the States. Gentlemen, welcome.
Pleased to see you again, John.
Thank you, John. Great to see you.
Thank you. Likewise. So we did talk early June, I believe, and there's so much going on in the markets now with GDX and GDXJ, the equity ETFs that represent a large portion of the producing miners in our sector, doing extremely well, breaking out to 10-year plus highs since our last interview. And one of the things that I find interesting about mining equities right now is, as you guys have been around the block a long time, you know that on days like Monday, the August 11th, just a few days ago, when you see gold down almost 1.5% and silver down about 2%, you'd expect miners to be down 4%, or even worse. Yet we saw a lot of miners flat to up that day. And that's kind of what I've been writing in my newsletter to followers and clients is we're starting to see equities kind of have their own life here because people are recognizing the value in our sector, number one, and they're recognizing the good earnings that we've seen that were kicked off by Newmont, NEM, back in July, which really hasn't stopped. It will come to a stop here this week because most of the companies have reported. But I think we can build off of this as a win, in the sector. And as Sonoro is looking to go into production not too far from now, right? Once you get your permit in hand, which may come this year. It's 12 to 13 months in terms of a path to production, at least from our last interview. Is that right?
Correct. Yes, it's correct. Yes.
So that's a really unique position that you're in because you're trading like you're a development story that doesn't have that path. You're still around the 12.5 cent US level, I think, as we record this. The stock, I think, did break out to about 14 US. Call it like 19 Canadian, but I think it's got more legs here because when you look at the near-term catalysts, you can look at a chart and you can glean some information usually from that. But the fundamental side of the story is also important. And maybe Ken, you could walk us through what's happened since the first week of June in the world of Sonoro.
By all means, on the business side of Sonoro, we haven't been idle at all. We've been working hard on certain elements. One, of course, is the original PEA was based upon a $1,800 gold price. And that was filed in August of 2023. Since then, of course, the gold price has escalated dramatically, almost doubled. So at $3,400 gold plus or minus, where we're at now, the value should have a dramatic upturn. And so we've been sitting down with our technical team in Mexico and essentially redoing the mine plan so that we can present it to the qualified persons for bringing up a brand new PEA for us. Now, it's going to take several months to get to that point where we have a new PEA issued, but the focus will be on providing the most up-to-date numbers and the economics of the project. And I'm expecting positive news on that at the time. In the meantime, we have ceaselessly worked on the getting the MIA approval. And I'm happy to state that the relationship we have with the Mexican government is strong. And we went for several years under the old administration where we couldn't even get a response out of the Mexican government. We have had a dramatic change in attitude between the government and Sonoro over the past 6 months or so since President Sheinbaum was inaugurated. There's an aura of cooperation going on now. The Mexican government is definitely supporting mining companies like us to get their projects through the permitting process. Obviously, there is a political phase to this as well. President Sheinbaum has to make sure that she doesn't overstep her bounds as far as the electorate is concerned. But everything's being done in a slow, systematic manner. The environmental issues that were previously glossed over are being addressed by the Mexican government. And we now have a really not well-defined way of getting forward so that we are able to provide the satisfaction for the Mexican government on the environmental issues and the social issues. So we feel very fortunate to have that kind of cooperation with the Mexican government. So it's only a matter of time now for us to get the environmental approval. So going forward from that, the next step for us, like I mentioned, is work on preparing an updated PEA. Now, that does not need an updated resource estimate at this point in time. We can use the estimate that was produced by SRK in February of 2023, and that still is valid to this day. Now, at some point in time in the future, we internally are looking at designing a new drilling plan as well. Obviously, we had been reluctant to raise money for drilling when the market conditions were tough and creating unnecessary dilution. Working on the basis of we go into production, we secure cash flow, and then we use the cash flow to continue with the drilling program. That's all fine. And that still is the plan. But at the same time, I think the market, and maybe your shareholders that listen to you out there, John, would be appreciative of the fact that we are looking at conducting a drilling program sooner rather than later. And that's part of the planning process that's going on right now. So I do expect that over the next 12 months, there'll be a lot of interesting things happening with Sonoro Gold.
That's great. Well, thanks for the update, Ken. And that's positive to hear about the drilling. I know, clients that buy mining stocks love to hear that. We're in a hot market, and I think you told us on our last interview that only a portion of the project has been mined, right?
Absolutely. When you look at the drilling that we've done to date, there's a grand total of 25 to 26 northwest trending vein structures that are all mineralized on the property, and we've only drilled about 8 of them so far. And of these 8, there is multiple drill targets for us remaining. So less than 30% of the known mineralized zones have been drilled and assayed to date. So there's a huge potential for expansion in the other 70% of the concessions, which we know are mineralized as well. But within the area of the known drilling pattern, keep in mind that when we put together the PEA back in August of 2023 at $1,800 gold, the interesting thing is that when you process the data through the mining software, you get a cutoff grade that is in the order of about 0.2 grams. Now, when you start playing with the numbers at $3,000 gold, for example, plus or minus, it actually impacts the cutoff grade quite substantially. And we will be reflecting that in the next edition of the PEA. I can't give you the numbers right now because they have not been calculated. But look at it from the point of view of if gold at $1,800 yields a certain number of ounces, in our case here, 440,000 ounces within the pit shell, how much additional gold can be economically viable when gold is at $3,000, for example? What was previously uneconomic is now economic. And we have, honestly, we really have to take care of our shareholders by investigating that and presenting that in the next edition of the PEA.
Yeah, that makes perfectly good sense. And a lot of shareholders and investors in general don't understand how a PEA or a PFS works, right? It's expensive to update these reports. You don't want to do that until you have a huge move in the underlying commodity price, as we've seen, or you're trying to sell the company and trying to show what the value is to a buyer, right? But I know you guys are not in that mindset. You're basically just saying, hey, look, we need to update this because it's the right thing to do. It's been a while. 1,800 gold is in the rearview mirror. That's never going to happen again, in my opinion, for many years. So yeah, they don't understand the conservative nature that a mining company has to endure, right? Even at 3,400 gold today, you probably have to do it at 2,800 gold, right? Like you can't do it at 3,400. They're not going to let you do it at that price because it may not be sustainable. But 1,800 to 2,800 is $1,000 an ounce. I mean, the leverage on Sonoro Gold is tremendous, and that's what we see as investors.
And you also, if you have to if you can factor in the sensitivities of plus or minus 20% or 25% for the sensitivities to the price of gold at the whatever the strike price will be in the updated PEA, it gives you an idea of the potential at the current price of gold, over $3,000. So we're looking forward to getting that prepared. And I would say give us 3 months or so, and we should be in a position to have that finalized.
Okay, so you think the PEA might be this year?
I think it could. With the following sea and a strong wind behind us, I think we could achieve it by the end of the year.
Great. Yeah, if nothing else, I mean, January is usually a seasonal period of strength for gold, and that would be fantastic. I mean, that is something that I just pointed out in an interview this week. Their PEA was many years older than yours, and it was at like I think $1,000 gold, and it's a very expensive process to update these reports, and you have to do it at the right time. And I think the timing for you is really good.
Sorry, it's an expensive process. I totally agree with you, and that's why we haven't done it to date. But now we're starting to get to the point where I believe that it's incumbent upon us to produce a new PEA in the near future. And one of the factors that I think was a catalyst for us to think in this direction here was a recent acquisition of the surface rights to the project. Now, as you know, in Mexico, there are two key elements for the mineral rights, which we secured 6 years ago when we first started drilling. And that enables us to go and drill and work out the resource and do all the necessary filings and the PEA in order to quantify the commercial project. We've done that. The other aspect is the surface rights, and the surface rights are separate from the mining rights. And the surface rights, in our case here, are owned by a rancher that controls about 5,000 hectares in our region. And so when we sat down with a rancher about a month ago, just over a month ago, we worked out a deal where we would secure the surface rights. And that is a necessary component, but you can't produce a single ounce of gold unless you have the surface rights to go with your mining rights. So we figured out a deal that could work for the rancher and for us. And we're happy to report that we've been able to take care of the payments to the rancher, to take care of the entire payment for the surface rights. So going forward from now, we're focusing on whatever we need to do now to get to production is going to be the focus for the company. We're not going to deviate from that because we believe we are so close to achieving a resolution on the environmental impact statement that we're taking every step right now internally and through the consultants we're dealing with to ensure that when the bell tolls for us and we are able to say we have the environmental approval in place, we will be well advanced with the pre-development of the project. And that is, like I said, the sole focus for Sonoro right now to get us to that point.
Yeah, excellent point, Ken. I think that was meaningful for us to see that press release because when you secured those surface rights and put up the money, it wasn't money coming from a raise. It was money coming from you and John and other people involved with the company, right? And so that shows tremendous conviction when you're putting up additional money after putting up a lot of money already in the project. Do you want to comment on that?
I will definitely comment on that. We have three partners: John, Jorge Diaz, our VP, our vice chairman of the company. He's our mining engineer in Mexico, and me. We all put up the money, put our shoulder to the wheel, got the payment done, and we have been supporting the company internally for quite some time. Now, keep in mind that between us as well, between the three of us, we are the three main shareholders of the company, and definitely we control 25%. Maybe 28% of the shares of the company between the three of us. So we have a vested interest in making it happen, but at the same time, we are not obligated to keep taking money out of our own pockets. But we feel in order to protect the shareholders by not engaging in over dilution at this point in time, we feel that it's appropriate for us and it's necessary for us to loan the company the money. And John can go into details of what kind of loan structure we have arranged with the company. John, you want to bring that up?
Certainly. Yeah, Ken has raised an important point that we try to convey to our shareholders all the time, John, which is that we value every shareholder. And when we look at obligations, the insiders are prepared to put up their own money. Most recently, about $4 million for the surface rights, unsecured, with no conversion rights, with the expectation we get paid back from project financing or production. And that's been our business principle. And it's because, John, we are running this like a business. And that addresses why we stopped drilling when we did. We didn't stop drilling because that's all we had. We knew, we believe there's a lot more. But all we wanted to do was to have sufficient to go to production, to generate revenue, to expand the company, the resource. And we've stuck to that principle all the way through. Now, there may well be a little bit of infill drilling in particular zones, which might improve things. So that's something that is on the table. But I think it's important to know that we have no intentions of rolling back the stock, because we do treat every shareholder as being a main contributor to where we are today. And so we will respect our shareholders that way, and we will respond that way by continuing to support the company. And it cannot be overstated how important the acquisition of the surface rights was to us. It was the last major hurdle to get over before securing the near. It had to be done, and it so happens it coincided when our previous lease expired. So the day it expired, we entered into a new one. And so the future of the company in terms of being able to go to production is assured. And I think there's another point to make here is that, yes, we do have the ability to take it forward ourselves based upon our experiences. There's Jordi Diaz, MacLeod, Ken, myself, each of us have 40, 50 years of experience in identification, funding, development, and production or sale. So we're approaching this as a business, not a promotion. I think that's most important for people to understand. You join us, you join a business where the insiders are heavily involved, fully committed, which is demonstrated every time. That covers it already.
I agree, John. We have addressed that in previous interviews, and I have put that out in my newsletter to my clients because it is unique. There's a lot of lifestyle companies in our sector that don't do the right things for shareholders, and it is frustrating to see, or they just make poor decisions. And I think you guys were making conservative decisions by not drilling it out, right? Because when you have drilled 30%, there's still enough to go into production for sure. And then you can generate cash flow, right? And then drill more accordingly whenever you have the cash to drill. It's like diluting shareholders into the ground. I've seen, companies grow to 2, 3, 4 million ounces. Yes, but they now have 500 million shares out, and the stocks are never going to move in that environment, in my opinion, as a portfolio manager. I see it all the time. They think it's going to work, but at 3,000 plus gold, it hasn't worked. So when exactly is it going to work is the question that a client will pose, right? And it's a good question. The last thing I'll ask with you of you guys is to address the share structure, since we just brought it up. So I note that you have about 239 million shares outstanding, and one of you just said that the insiders are around 28%. So could you kind of break it down for us in terms of where other institutions or funds or larger shareholders exist, so we can get a better understanding?
Certainly. The basis of the company, Sonoro, was always originally from our European supporters who were with us in previous projects. So when we started, it was primarily in Europe, Germany, and Switzerland. So I would say, in addition to the 28% that we hold, and maybe family members would take it to 30%, there's approximately about 40% that we can identify, 40 plus, that are in Germany and Switzerland. Now, understand that we do not have institutional investors, but we do have private banks in Germany and Switzerland. We have wealthy individuals, people who look at a business. And one of the good things, I sometimes jest with people in North America, a European's question is this a 3 or a 5 year project? That's the number one question. It's not as this 3 or 5 day project. And so what we have as a result of that are people who've come with us long term. And it's important, John, because you read charts better than anybody. You look at how Sonoro was. And then when we didn't get the MIA, how the shares came down and they really a long, dark summer.
Yeah.
And you go from the 1st of October, it then started to progressively move upwards. And if we look at the charts, and I know you do, to me, there's stability, there's a strong upward trend, and it reaches plateaus and then it consolidates a bit, then it moves up again and consolidates. And we say to our shareholders, this is magic. We don't want a straight up and a straight down. So we can point to the facts, and the facts are always helpful. Over 15 million shares traded in Canada in June, 12 million traded in July. I'm not sure the numbers in the United States, but I think maybe it's 1.5 million in June or whatever. The point being, John, is this. We are not only now having a strong European base, but we're actually increasing the number of supporters from the States. That's a marked increase, which obviously is due to you and other parties speaking about it. But there's a strong questions coming up now and encouraging questions from people who are now looking at us and say, wow, you're a real company.
Mm-hmm.
Not a promotion. And that's an important thing. So in our business, John, we say we have the ability and we believe in our ability to not only to finance it and secure the financing for it and to take it forward, but we also are business people in saying that if there is a proposal that comes through that reflects value, we'd be pleased to offer it to our shareholders to consider. And it will be a shareholder decision, not an insider decision.
Mm-hmm. Great. Well, so in summary, then, if you have about 239 million shares, 28% insider holdings, would you say about 40% would be in the European area that you just described?
Then about 40% there, with an increasing number also now in Scandinavia. In Asia, there are some. But the biggest growth we've seen, John, is in the USA in
Okay.
last 6 months, or last year probably.
And a lot of
Yeah.
that has to do with your outreach as well, and your ability to present the company as we're doing today, for example. So we're very pleased with the way that
Oh, thank you.
the US market is developing for us.
Yeah, I mean, you guys deserve it. Anyone who puts up $4+ million to keep a company afloat in tough times. I mean, we met each other, I guess, about a year and a half ago, and
Yeah.
things were not as rosy as they are now, right? You go
Yeah.
through peaks and valleys in any business, but in mining, it's very, very true. And you guys have been doing it 35 plus years. You've seen where a lot of bodies are buried, so to speak. And it's a tough industry. So I'm very happy for you. I know my YouTube partner, Don Durrett, who has goldstockdata.com as the founder there, is very bullish on the stock as well. It's one of his top 100, gold names that he tracks and owns. Yeah, I think you guys are going to make it to the finish line in terms of production. That's one of the things that a lot of exploration or development companies will not, right? They'll acquiesce along the way, sell for a 20 or 25% premium and move on to the next thing. But you guys actually have the capability to build this, which I think is important to note.
And we have the comfort that we have the capability to bring it to production ourselves. We don't need a joint venture partner per se to take it to production for us. We've done it many, many times before. So to give you an idea of the degree of comfort we have, we've just put a $4 million loan to the company in order to pay for the surface rights.
Right.
And if that is not a show of strength to a potential shareholder who may be sitting on the fence, I would say, yeah, we're committed to making it work. We're committed to the success of the company. We've got the backs of all the shareholders, and so let's work together to keep achieving greater distribution in the United States and elsewhere. And one day we'll wake up and there'll be an approval in place for the MIA, for the environmental impact statement, and we'll all be there together to achieve the success that we have been looking for several years.
Agreed. Well, thank you guys. Really appreciate you coming on the show, and we'll continue to follow your story. For those of you that want to learn more about our services, it's fenneckconsulting.com. And if you go to the performance tab there, you can see how we performed over the last 9.5 years. I mentioned on our last interview that we were planning on a pretty good second quarter. We're up 61.1% through June 30th. And that's just our retail numbers. That is not including any private placements or anything else, which would get us well above that number. But I think it's disingenuous to include those numbers because many clients don't have the ability to buy into financings, right? But I think this is the time you go for it as an investor. You've got to put orders in to buy something. And this is one of those stories that seems to have legs and will make it to the finish line in a hot gold market. That's important. So, guys, thank you again for your time. We'll talk to you again later this year.
Pleasure. And any of your listeners, John, they are very welcome to contact either Ken or myself, or indeed go to our website and sign up just to get updated news releases.
Great. And we'll put
John,
the
as
website
always,
in the show notes.
As always, great to talk to you, John.
Yeah, thank you, Ken. Thank you, John.
Thank you, John.
All right. Have a nice day, everyone.
Thank you.